We just wrapped up Canada Day. Father's Day is behind us and Stampede is officially here in Calgary, which means we're headed into the second half of the summer real estate season. Today, I'm walking you through everything that happened in the Calgary market in June, what's happening around us nationally, and a couple of things going on right here in Alberta that I believe are worth knowing about too. June has a pretty clear story to tell. Calgary saw just under 2,200 home sales in June, a small pullback from last year and a touch below the long-term average for the month. For reference, we saw about 2,160 sales back in May, so June came in essentially flat month over month. New listings came in at just under 3,900 and total inventory sat at about 6,800 homes, which is actually down slightly from a year ago. Put those together and you get about 3 months of supply citywide and what's called the sales to new listings ratio, which is basically the share of new listings that turn into an actual sale on that particular month, is sitting at 56%. In plain terms, that is a balanced market. Not a seller's market like we saw a couple years ago, and not a buyer's market either, at least not everywhere. Because here's where it gets interesting, and this is the part I really want sellers and buyers to pay attention to. Conditions are not the same across the city, and they're not the same across property types either. I know I've been saying this for months, and I can't stress it enough. One person's experience in this market can be completely different from the next, and that comes down to price point, location, and the type of property that you're selling. It doesn't mean a property is good or bad. It just means we're facing very different conditions in different sectors and in different pockets of the city. Detached homes are holding up the best. The benchmark detached price came in at $750,000, down only about 1% from last year, and with about 2.5 months of supply citywide. But break that down by quadrant and the picture gets a lot more vivid. In the west side of the city, detached homes have under 2 months of supply. That's tight seller's market territory. In the northeast, however, that number jumps to about 4 months. That's more than double in the same city, in the same month, for the same property type. Duplexes, what we still call semi-detached homes, actually posted a small gain, essentially flat year over year at $695,000. And townhomes are down about 6%, sitting at $424,000. And here again, location changes everything. In the west, townhomes have about 2 months of supply. In the east, that number is over 6 months. If you own a townhome in the east, right now, pricing it sharp is not optional. It's the difference between selling this summer and still sitting there in October. And then there's the story of the month, apartment-style condos. Condo prices fell about 9% year over year to roughly $300,000. And citywide, that segment is sitting at about 5 months of supply, with sales to new listing ratios in the mid-40s, which is genuinely a buyer's market. Break it down by quadrant and it gets sharper still. In the east, condo supply is running at about 7 months. In the northwest, it's closer to 4, and downtown in the city center, we're close to half of all the condo inventory in Calgary actually sits. Supply is running at about 5 months. That's nearly double the wait time to sell a condo in one part of the city versus another. And it comes down to almost entirely how much new high-density supply has hit specific areas over the last couple of years. I've had a lot of people reach out to me lately asking about strategies specifically for apartment-style condos, and I'm always happy to share what's working. There are definitely things that are highlighted more than others in that apartment style segment, but at the end of the day, you can do absolutely everything right. And if the price point doesn't align with market realities, the property still won't sell, no matter how wonderful it is, how well presented, or how much marketing goes into it. As a realtor, I can control the marketing and I can control the presentation, but I can't control the market itself or what someone is actually willing to pay right now. That's where the data comes in and why we need to stay proactive about watching prices in your specific community. If the numbers don't make sense for your situation, I will always be honest with you about that. And if holding on to the property is an option for you while you wait for a better time, that's always available. With the apartment sector specifically, it's genuinely hard to predict how far away that better time might be. But if your goal is to sell in this market, then being realistic about pricing from the start is actually what gets it done. Here's one more number that puts the whole city in perspective. The total residential benchmark price in the West sits at about $735,000. In the East, it's about $400,000, nearly double inside the same city, inside the same month. So when people ask me how Calgary's market is doing, my honest answer is it depends entirely on what you own, where you own it. If you're a buyer, this is probably the most negotiating power you've had in years, especially in condos and townhomes in those softer districts. If you're a seller, especially in one of those softer pockets, pricing strategy and presentation are what separate a quick sale from a listing that just sits. Now, zooming out year to date, Calgary sales are down 11% compared to this time last year. And the benchmark price sits at $564,000, down roughly 4%. That's normalization, not a correction. And we're still well above where we were years ago. Calgary also continues to avoid the kind of price weakness you're seeing in Toronto and Vancouver, where conditions got soft enough that the federal government actually stepped in this year with support measures for unsold condo inventory from developers in those two cities. That tells you a lot about how differently Calgary is positioned compared to Canada's largest markets. If this is the type of content you've been looking for, please show your support and don't forget to like, share, and subscribe. While we're on the topic of price and pockets of the market, I want to take a moment on the luxury side because it's a segment we don't always talk about enough in these updates, and it's one I'm always watching. It's been especially fascinating to watch this year. I'm seeing more competition start piling up at the higher price points, and that's starting to show up as price movement on some of those listings. As we head into the slower end of the summer stretch, pricing your luxury property correctly from the start or adjusting to that correct price matters even more than usual because you don't want to still be sitting on the market past September when buyer activity naturally starts thinning out. I'll say this too, Calgary's finest closed over $13 million worth of real estate volume this past June alone, including 3 luxury properties, 2 listings, and 1 buy. So this is very much a market I'm actively working in if you're thinking about buying or selling at that level. Speaking of listings, here are 3 I'd love for you to take a look at right now. There's a beautiful townhouse in Sherwood, just 5 minutes from Beacon Hill, close to all amenities and great schools, freshly painted throughout, and sitting right across the street from the playground. I also have a 2-bedroom, 1-bathroom apartment in the iconic Castle building on Upper 17th Avenue with direct downtown views that are honestly spectacular. New carpets, a fresh coat of paint, and it's ready for immediate possession. And something a little bit more unique, that's an incredible 4-plex style townhouse in the trendy neighborhood of Renfrew, just minutes to the Bridgeland. This one is a fantastic opportunity if you want that inner city detached home feel and square footage without paying inner city detached home pricing, while still getting all the luxury upgrades that come with a newer infill build, including its own private rooftop terrace with direct downtown views. You can literally watch the Stampede fireworks from up there. It's beautiful. Now, since it's Stampede season, let's talk about what that actually means for the local economy, because I believe people underestimate this. A new economic impact study found that Stampede generated about $720 million in economic output across Alberta last year, with roughly $665 million of that landing right here in Calgary, and close to $190 million paid directly in wages to Calgarians. Tourism Calgary says visitor spending is already running about 7% ahead of this time last year, and both hotel bookings and international travel bookings for this year's Stampede are pacing ahead of 2025, with a lot of that early interest coming in from the US, the UK, Belgium, the Netherlands, and Australia. During the 10 days of Stampede, local spending typically jumps about 18% above normal, and restaurant spending alone jumps closer to 30%. So here's my honest take. Yes, showing activity typically slows down during Stampede. That happens every single year, and I'd tell any seller listing right now to lower their expectations for foot traffic and speed of decision-making over the next couple of weeks. But I wouldn't write the whole period off either. When you have this many visitors and this much money moving through the city, some of those out-of-towners, especially anyone here scouting Calgary as a place to relocate to or invest in, are going to carve out an hour or two between rodeo and concerts to start browsing listings online, if not touring them in person. Lower your expectations for showing activity volume, but not for possibility. Let's talk about what's happening around us nationally, because a few things shifted in June that are worth knowing about. The Bank of Canada held its key rate steady, with the next decision coming July 15th. Inflation actually ticked up in May, mostly because of higher energy prices, but the core numbers that the Bank of Canada watches most closely have stayed fairly well behaved. On the mortgage side, we're now seeing some fixed rates advertised just under 4%. To see a 3 in front of it, that's the lowest we've seen in a while, and that's shifting buyer psychology in a real way. Let's be clear though, where rates go from here is genuinely uncertain in both directions. There is a case for rates easing further, and there is a case for them holding steady or even ticking up if inflation proves stickier than expected. We've never seen so much of the 3 scenarios happening all at once. Nobody has a crystal ball on this one, so talk to your mortgage broker about your specific situation rather than trying to time this perfectly. On the trade side, July 1st marked the scheduled review point for CUSMA, our trade agreement with the US and Mexico. The people closest to these negotiations have been clear that this is a checkpoint, not a cliff. We're not expecting a dramatic overnight change, but there will be a fair amount of back and forth in the weeks ahead. For Alberta, this matters because our economy leans heavily on exports, and so far, the current arrangement has been manageable as long as it's being followed as expected. Meanwhile, Canada's economy actually returned to growth this spring after a couple of soft quarters, and Alberta continues to outperform the rest of the country on jobs and population growth, even as that growth has cooled to a healthier, more sustainable pace. Frankly, a slowdown in population growth after the pace that we saw the last couple of years isn't a bad thing. It's giving supply a chance to catch up with demand, which is part of why we're seeing more balance in the market today. And again, this is a good thing. A few local things worth knowing about too. First, a reminder on property taxes. The deadline to pay your 2026 Calgary property tax bill was June 30th. So if you haven't paid it yet, a 7% late penalty kicked in on July 1st, and it climbs to about 14% total if it's still unpaid by September 1st. If this caught you off guard, it might be worth looking into the city's monthly tax installment payment plan called TIP, so next year's bill doesn't come as a surprise. There's also some real news out of City Hall worth watching if you care about housing supply long term. Council voted earlier this year to repeal the citywide blanket rezoning bylaw, which had made it easier to add duplexes, triplexes, and secondary suites across most of the city. And they're now working through what replaces it. This is genuinely a very controversial issue. Some Calgarians feel the original rezoning moved too fast and eroded trust in the planning process, while others argue that walking it back will slow down the housing supply that we need to keep prices in check. I have my own opinions about it. Either way, it's still playing out at council this year, and it's worth keeping an eye on if future housing supply matters to you. One more practical note. Starting July 2nd, Alberta rolled out a new combined driver's license that also carries your Alberta healthcare number with it. So over time, you'll be able to carry one card instead of two. It won't cost you anything extra, and you'll get a new version automatically the next time you renew your driver's license, though you can also visit a registry earlier if you want it sooner. Just bring your current driver's license and your Alberta healthcare. As a mom, I love this. I don't always have my kids' healthcare cards on me. I have their numbers on my phone. So anything that simplifies what's in my wallet, at least for me, is a win in my book. Now, let's talk about what's next, because I want to spend some real time on this. If you're even considering selling this fall or winter, this is genuinely one of the most important things I'll say all year. Selling in the fourth quarter and into January in Calgary is a completely different game than selling in the spring. And most sellers don't realize that until it's too late. Your buyer pool shrinks, but it also gets more serious because nobody is casually browsing houses in November. Your photos and staging have to work twice as hard because there's less daylight and everything outside looks a little bit more tired and boring with the snow, things like that. And your pricing strategy has to be sharper because there's no spring frenzy to bail out an overpriced listing. I'm hosting a free webinar that walks you through everything you need to know to sell successfully in a fall or winter Calgary market. How to time your listing so it doesn't get lost in the holiday lull. What our Wow Effect staging package does differently for a fall or winter listing. How to price against a smaller but more motivated buyer pool. Videography, and the marketing push that we run to make sure your home doesn't just sit there over the holidays. If you're even a little bit thinking about listing before next spring, save your spot because the prep work genuinely needs to start months before your sign goes on the yard, not the week before. I'll drop the registration link below. Spots are limited, and I'd love to see you there. And if you've been watching my channel for a while now, you know that I've come on here before and talked about Venezuela. I am both Canadian and also of Venezuelan heritage, and I hope that many of you watching this know that there was two massive earthquakes that hit my country. There was a 7.2, followed 39 seconds later by a 7.5. And the next day, there was one for 4.9 with tons of aftershocks. Right now, the numbers state that over 2,300 people have died, but there's still over 40,000 people that have yet to be found and that are probably sadly deceased and under a bunch of rubble and concrete in these buildings. What I wanted to say on here is I know that we all have our problems and that we all live in our own bubble, and that should not take away from what's happening. But if it's in your heart to give or donate or get involved, I'm going to drop a link below for an organization called the We Love Foundation, partnered with GEMS, that I have done my research and I feel confident that the funds are being used for the right reasons. Venezuela doesn't just have immediate needs, but it'll have very long-term needs. It took 9 months of 24-hour shifts to clean up 9/11 when the Twin Towers collapsed. This is a ton of buildings in a third world country where people make less than $2 a day. So they're estimating that cleanup alone after all these bodies are found and everything could take over 2 years, but Venezuela hasn't been governed properly for the last 30 years. So we need your help, and we don't need it just now. We may need it into the future. There's medical bills. Tons of people are without a home. If it's in your heart to give, I'd love for you to support this organization that will continue to support my country in the ways that is needed. So to close things off, expect showings to go a little bit quieter over the next couple weeks, while everyone enjoys Calgary Stampede. That's completely normal every single year. And then watch for activity pick back up slightly through late July and into August. If you want a deeper conversation about your specific situation, whether that's buying, selling, or just understanding what your home is worth in today's market so that you can plan ahead and make decisions, please reach out anytime. And don't forget to join us for book club, which is always the last Wednesday of the month. We took a break in June, and this month we're going to go a shorter book so that no one gets overwhelmed with reading and Stampede season. And I would love to see you at my next webinar and back here at our next market update. See you there.